We will call to order this insurance committee meeting for April 3rd. It's 4:01.
Oh, yeah.
We got two presentations, Philip?
Two presentations. 4 and at 4:30.
Whenever, 4:30.
And I guess we're starting with VACORP. I see.
The VACORP is, as you know, we're with Versa currently, and Versa has traditionally been with the VML. That's kind of the town side. The VACORP is kind of the parallel or complementary for counties. Okay, and this is Stephanie Heinzelman, who used to be assistant county administrator in Charlotte County and looked as young as I did 25 years ago when I first met him. And this gentleman, Chris Carey, hasn't aged as badly as I have, but he's been around a while too. And Chris Carey and Stephanie Heinzelman with VACORP are here to make presentation to you on our workers' comp, liability, auto, property,
The whole
And-
kit, minus health insurance.
minus health insurance for the most part. And airport and I think there's two, and fire equipment.
Separate.
That's separate. Those are two separate policies.
Okay. Do you guys want to get up and walk us through what you have here? Or?
I would be happy to.
All right.
I'll stand up here if that's okay.
Yes, sir.
Sir, that's where all of ours.
So, just to give you a little bit of background, my name's Chris Carey. I'm the administrator of VACORP. I have been working with Virginia local government since 1994. So in October, I'll hit 30 years of service working with county government or local government. VACORP did start as a county group in 1993. In fact, in 1993, only county governments were eligible to participate. And over the course of the past 31 years, we have progressed over time into allowing or seeking membership from other types of political subdivisions. So we have had towns and cities in VACORP now for about 10 years, maybe between 10 and 12 years.
New this year.
This is not something new. So we have been, gradually moving into that space. There used to be 3 pools in Virginia. There was a school board association pool. The school board association pool merged into our pool in 2013. And then shortly after that, we started bringing in cities and towns. We've always worked with large self-insured entities. So we have worked with most of the cities in the state. In fact, if you look at our membership, the vast majority of the large self-insured cities in the state have been in VACORP for quite a long time. But within that past 10-year period, we have been taking on non-self-insured municipalities. So that's kind of how we land here today. Our product has been really recognized nationally for the quality of the coverage. And we view the pool as being owned by the members, so we don't sit on a lot of surplus. We actually benchmark to insurance industry ratios, and if we hit our benchmarks, we return those assets back to the membership. So you'll never see us sitting on $100 million in surplus. That's just not how we operate. Since the COVID pandemic happened in the past 4 years, we've returned almost $8 million in rate credits from hitting those benchmarks just over the past couple of years. In fact, if you were currently a member, you would be receiving a rate credit for next year, probably in the neighborhood of $5,000 to $6,000. So we're not really built to do that. We have presented you with a couple of options. Option number 1 that we presented you matches up, and that's what you currently have. And that's $185,000, and we think, without exception, we meet or exceed everything that you currently have in that $185,000 quote. And then if you go look at option 2, and I'll go through some of these items as we get into it. If you go into option 2, we raise the price a little bit. It is still approximately 25% cheaper than what you're paying, but we give you what we think are some additional benefits. For example, Your current environmental deductible is $250,000. Our standard environmental deductible is $25,000. So we would lower your deductible to $25,000 in option 2. We have a comprehensive active shooter program that we call security risk management. Currently, you just have kidnap and crisis management coverage. This quote enhances all of the active shooter coverage to include a bunch of death benefits and other things that happen if you actually, unfortunately, have an event like that. We enhance a lot of your property coverages. We enhance your defense coverages. So under your public officials, we enhance what we would defend. In fact, we have recently, effective July 1st, we're adding a coverage due to some of the things that are occurring with police officers being prosecuted. We're adding some criminal defense coverage where if you have an employee or council member that gets arrested and is acquitted, we would reimburse their legal fees out of this coverage.
That's for criminal.
Criminal. That's for criminal.
Other than that, if you would.
The civil stuff we're doing. The civil stuff we're doing is a matter of course. The criminal's an add-on.
Outside the scope of the county?
No, it's only course and scope of duties.
Yeah, that's what I was thinking.
Yeah, course and scope of duties.
Yeah, I wouldn't think.
I don't mind asking stupid questions, okay? I
No,
don't.
that's fine. On the cyber coverage, like right now, your current carrier provides, they're writing $500 million worth of cyber limits to 300 and some members of their pool. But the most they'll pay in a year is $15 million. So there's 500 million
Depends on if you get a claim before
before the limits hit.
Yeah.
So this second option that we've given you actually gives you your own, this gives you your own dedicated limit for cyber. So it doesn't matter what happens to any of the members of the pool, you have your own dedicated cyber limit that would apply regardless of the situation. And we've also enhanced some of the coverages in there to include the public relations limits. It increases your social engineering or your fraudulent funds, fraudulent transfer. It increases those limits to meet that. So there's a lot of enhancements as you go through it. And then if you look at the third page, we actually took a look at your volunteer fire program, and we've added the ability of the town to move the fire program under the county's policy rather than buying multiple separate policies on under the towns on multiple policies and moving those under the town's master policy for the vehicles, the liability. And one thing that we did that's a little different is currently you buy what's called an accident and sickness policy. It has a death benefit of $50,000 and it has a $500,000 medical expense limit for injuries. We have included a workers' compensation option rather than that. I'll explain why we do that. So under the workers' compensation, right now the floor for the death benefit on that is $200,000, so it would actually raise the death benefit for your firefighters by about $150,000, and then it provides lifetime medicals for work-related injuries. So the coverage is a little bit better. That's not why we do it. We do it because you're also insuring their line of duty act risk, and the only way you can access line of duty act benefits is to have a workers' comp claim. So the workers' comp combined with the line of duty, we believe allows us to be on the front lines of investigating an injury and making sure that if they're owed benefits, we can expedite it. And if there's a reason that we don't believe they're owed benefits, we've done all the investigation work and we can submit that to VRS on your behalf. With the accident and sickness policy, that's not a workers' comp policy, so the investigations are different. It's more of an accident. Certain things are triggered under that that don't get triggered under workers' comp. So that's why we actually recommend the workers' comp program. We do insure the vast majority of volunteers in the state. The state estimates that there's about 30,000 volunteers in the state. We insure about 25,000 of them. So we have by far the largest workers' comp and line of duty program for volunteers on the fire side. So we're doing the vast majority of that work. And we think that that really is a benefit. Now, if you cross all of this up with what you're currently paying, the workers' comp is about $3,000 more than the accident and sickness, but what we're saved on the other lines of business, this is about exactly what you're paying for the volunteer coverage, but you would have workers' comp instead of accident and sickness. Does that make sense? And then on an overall basis, you can wrap all of this up and still save what we think probably ends up being, somewhere around $30,000 or $40,000 by wrapping this all up in one package. Service-wise, we have 150 people in Virginia. We have people in Richmond. Our main office is in Roanoke. Most of your claims would get handled out of Roanoke. We have safety folks that are in the field and other individuals that you might see from across the state. But we do have 150 people. We do have all of the self-service tools that you have now available on the website, so we don't think there's any reduction of services that you would see as a result of any shift. The only thing that changes on claims filing is you have to give your staff a different 1-800 number to file their workers' comp claim. That's literally the only difference. The website filing is very similar, but the 800 number is different to file a workers' comp claim. We use a very similar services to do that. So I don't want to get too into the weeds on this unless there are specific questions that you have on that. But Stephanie, do you know about how many municipalities we have in the group right now offhand?
It's about 30, a little under.
30 towns? Does that include?
Towns and cities.
Towns and cities. So we have been growing in that area. We do represent 87 of 95 counties. We do almost every school board in the state. We have about 600 members. In scale size, we're about almost twice as big as Versa in scale. So we are really capable of handling this. We do use an account management structure. So you would have an account manager that's assigned that would be your principal contact that kind of helps you navigate and be your advocate with us as you kind of work through different issues that may arise. So, Stephanie's been doing this for longer than me, at least on the local government side, but our staff's been doing this for a very long time, and we would really look forward to the opportunity to work with the town of Blackstone if that's if that comes to it. So, do you have any questions?
So besides, when comparing package 1 and 2, besides the, besides the cyber risk deductible, I believe, cyber risk deductible difference, the environmental liability, and then I'm just looking at the pages, it looks like utility services, property and transit has got a different limit.
So there would be a few different limits in there. In option 1, I believe you guys own a bridge. Your current program.
Do we own it, or is that?
We own that bridge.
Barbara's Bridge is ours.
So currently, your current policy excludes bridges.
Didn't know that until.
I was about to say, I didn't know I thought it was VDOT and we just maintained it, or maintained the structure.
We own the bridge, and we have to inspect it every year, and the funding for the replacement of the bridge was provided by VDOT.
Correct.
But we're responsible for inspections and paving, and, the access points to it and all that kind of stuff.
We've owned it before.
So we included that. We included the bridge in option 2,
Gotcha.
which was one of the big ones.
Now this may be a dumb question. Obviously with bridges lately in the news, but what are the liabilities the town has with a bridge like that? Not a large bridge. Is it somebody jumping off of it? Is it somebody driving off? What is
So we're actually talking the physical reconstruction. So right now, if you were to have an earthquake,
Okay.
let's say you were to have an earthquake like we had
In
Yeah, the Louisa earthquake, and that bridge were to have any structural damage from the earthquake, you wouldn't have any coverage to repair or replace that bridge. If a tractor trailer hit it, give you an example in Pulaski County. Actually, this is a real life example where Pulaski County had their garbage truck with the bed up, forgot to put it down and hit the underside of the bridge. You wouldn't have any coverage for that if you needed to repair or replace the bridge. You know, we do think you need that coverage. Under the equipment,
I will interject, VDOT does require that we inspect it every 2 years. The B&B does a bridge inspection, I think they did it last year.
Yeah.
Keep them on file and send a copy to VDOT and stuff. What we do is, I assume that, and we can provide it to an insurance carrier if we needed to at some point, but
yeah.
we're required to do inspection every 2 years.
If you were to look at like your inland marine and your computer equipment, right now you have a $10,000 cap on anything that you own unless you have it scheduled. We've removed those caps. So if you have anything that you think, like in theory, if you have something that you paid $9,000 for, but it now costs $12,000 to replace, you only have $10,000 on that coverage for that if it were not scheduled. Ours doesn't have any, the option 2 doesn't have any of those caps in. On your boiler and machinery, we provide a higher limit on the boiler and machinery, and we improve some of the sublimits on that. If you go into the general liability, there's not a ton of differences in the general and law enforcement liability, but you can see in the security risk management section there are quite a bit of differences between what you have and what would be included in that. Under the public officials, we add coverage for back and front pay. If you get into any wrongful termination type lawsuits, you don't have that. Currently, we add that in option 2. We add several defense things. Right now you have defense for injunctive cases and land use cases. We add in defense costs for almost every single item that would normally be excluded under the policy. Basically, the only thing we don't add civil defense coverage for is criminal acts and fraud. That's basically it. So at that point, we enhance when you would be able to access legal defense costs. Under the auto, right now, you don't have replacement cost on any of your vehicles unless the purchase price was over $100,000. They actually changed that effective July 1st, 2023. It used to be $50,000. It moved it to $100,000. That impacted about 8 of your vehicles in your fleet. We, in option 2, pushed that back down to $50,000, which is what our standard is. So option 1 is $100,000. Option 2 is $50,000.
When you say that, we've got some vehicles, we got a new one coming this month, I think, a new bucket truck,
Yeah. What's the purchase price?
$215.
So
How
under
would that be handled if that thing got fried and got totaled?
so since the purchase price is over $100,000, you would have replacement costs with like, kind, and quality. So you would have that under both programs since the purchase price was over $100,000. On our option 2, we drop it from $100,000 to $50,000. So any car with a purchase price over $50,000, it would be a replacement cost.
You didn't drop coverage, you just covered more.
We just covered more.
What's bus shop? Is bus shop covered somewhere, or is it federal? Bus shop. Bus shop covered under federal? It's
No,
in
it
this.
should be included in it.
Yeah.
Okay.
The physical plant should be included.
So you have under your crime policy, your funds transfer fraud limit is $25,000. Our standard limit for that is $250,000. So in option 1, we give you $25,000. In option 2, it's $250,000. That is kind of one of the bigger areas where we're seeing claims is funds transfer fraud. We have recently seen much larger claims than $25,000. So we think that's an important one. The excess liabilities are essentially the same. On the environmental liability, again, we just dropped option 1's a $250,000 deductible, $250,000 deductible. Option 2's a $25,000 deductible. And then you can see on the cyber risk, our product under the cyber risk is quite a bit broader than what you currently have. So we match it under option 1. Under option 2, we give you really a much broader cyber product. We're handling the cyber risk for a lot of critical infrastructure in Virginia, so our ability to get access to attorneys, forensic teams, to get state and federal law enforcement involved, we are by far way ahead of the game on that. We actually have been asked by the Commonwealth to assist them in that, and the Commonwealth has actually asked us to provide the cyber coverage to some of their state agencies because of our capabilities in handling an incident response. So we think that's really quite an enhancement over what you have. You know, the bottom line is our option 2 saves you about $47,000, which is more than 20%, and gets you quite a bit more coverage than what you currently have. We think it addresses all of your exposure areas in a much more comprehensive way, and we know we can provide services equal to or better. So we think this is a pretty competitive offer.
If I may, one of the things that have been talked about at council level for a couple, 3 years, and we haven't had money to put it in the budget, but I think there's a move toward it. We talked a little bit in my office, but for the benefit of the council, human resources, human resource counseling, human resource, not payroll, obviously, the simple stuff, but questions about how to handle and what to do with certain human resource issues that are complex. Do you have those resources that the mayor or myself or council can reach out to and say, how do you resolve these complex human resource issues? I think some council's struggling or kind of juggling right now.
So our approach is a little bit different. We chose not to hire a staff person because a lot of HR issues can turn into litigation, and we didn't want to be in a scenario where we provided you advice as your insurer, you didn't take the advice, and then you got sued, and then there's suddenly a conflict between you and the insurer if a lawsuit arises. So what we did is we entered into a contract with One Digital, which is the largest employee benefits company in Virginia. And we have a team, their team in Richmond, available to you to answer HR-related matters.
And that's included in the
That's included in what we have here.
So if we get an FMLA request or something like that, we can contact them?
If you have an FMLA request, so One Digital, since we don't have a single staff person and we're using a third party, One Digital has dozens of people and they have specialists in different areas. So we actually have access to their entire team. So how we manage it is we have a direct email with them. You would email your question to them. They would get the right person, and that person, depending on what the issue was, they'd get the right person to make contact directly with you to answer that question. So it might not be the same person every time. It would be a function of what the particular issue was. Did I explain that correctly?
Yeah, that's right. And it would,
It's directed to a specialty person, not
Right.
just a
Right.
generic.
Correct.
Is that in both options?
That's in both options.
That's a good question.
Now, outside of that, we do employ multiple attorneys on staff. We have a liability attorney that's on staff. We have 2 workers' comp attorneys in Richmond that are on staff. If we have particular issues where a legal opinion might be necessary, we do have access to those resources on staff and can access them directly. But for the vast majority of your HR-related issues, you would flow it through that One Digital system. We think that that's a better mechanism for it because it removes us from potentially being in conflict with you if there's an HR dispute that involves you and staff members. It can reduce the legal loads on having to hire multiple attorneys to deal with conflicts if there's a dispute. So that's kind of how we chose to do it. Did that answer your question?
Yep. Thank you.
And
And I
so-
think it may be beneficial for the council to hear some of that. when we
This
discuss it.
this is a Philip question.
Mhm.
Buses are included in this.
Believe
Do
me or
we
not.
get a reimbursement through our,
We should, yes. I think the state will reimburse based on the cost, and that's probably a good Mary question as well.
can we make sure that happens? I mean, I don't know if I've ever seen
A reimbursement.
reimbursement personally, but,
Or like an insurance claim you mean?
well, no, just because we're including the buses in our policy itself.
For the reimbursement from the state.
For the
Oh,
cost
our
of the cost
reimbursement
of it, yeah.
includes
Yeah,
that,
for the
right?
cost of
Yes,
the policy.
part of the budget.
Right,
It
yeah.
includes that.
Not
Yeah.
for an incident, but
No,
just for the
yeah, so
policy overall.
anytime we submit our payment to our insurance, it's broken down into our like monthly, and I can probably
Okay.
pull a reimbursement request if you.
I'm
want
just
to
curious
see.
as to how, what the.
I would
How
think
we
it'd be
get
really
If it
good.
costs us $185,000, how much of that is being reimbursed through the state or the
Right,
feds
right, yeah.
for the bus
Off the
service?
top of my head, I can't remember, but I'm sure Alex
That's
can
fine.
pull.
It's an appreciable number of the vehicles at the town.
That's what I'm saying. It says 51 vehicles, and I feel like quite a few of those are buses.
I'd say, how many buses you got?
When
Head.
I was there, I mean, we had like 14 or 15
I was gonna say
maybe.
50.
It's a pretty one,
Yeah.
for sure.
Have you got garage policy on it too?
That's automatically,
How much is that?
the garage liability policy?
I didn't look for it.
Yeah, so we actually just include that. It's a function now. If you needed us to give you
A break.
some sort of breakdown of that premium so you could request reimbursement, if that was a reimbursable item, we could break down the cost of that out of your GL policy, but it's just loaded in there. It's just an automatic component.
All right, well, under the business automobile, it says $1 million in garage liability.
Yep.
What is garage liability?
It's expensive.
Okay.
For, when you have someone's car that you're working on or whatever. and-
Falls on you?
No, no.
No, so what would happen would be like, let's say you have somebody's car in your garage and the building burns down and their car goes down with it,
Ah,
Falls off the lift or.
falls off the lift. They're driving the car
well, it
from
shouldn't be the case,
point A to point B and they hit somebody.
But a fire truck, since they're covered separately, is that something you would cover if we damaged a fire truck?
That would be under the garage
It
liability
would be under
policy.
the garage liability. We don't have private vehicles in there,
No.
ever, if I make that time. No.
Oh, I see what I'm supposed to.
I don't think fire trucks would be the one thing we're working on that don't fall under our current carrier.
Well, if we can, I'd like to just see if you could provide a number that separates the garage out there, the bus shop. I don't wanna say garage, cause garage policy is separate from the bus shop.
Yeah.
And that way to see reimbursement wise.
So if you had the bus shop, there's probably a building premium associated with it. There's a liability premium that we could break out for it. There would be the bus, the policies on the fleet itself. So yeah, there would be several components of that could be
What's our
broken out.
reimbursement? Is it 75, 25? What is the reimbursement?
No,
rate?
it's vastly state and federal for the operation. Some of the salaries are 75-25 and some are 50-50.
Most of it paid.
That's what a split is, but I think the total town contribution is between $40,000 and $50,000, I think, during the course of the year. If I'm not mistaken, $40,000+ sticks out as what we actually contribute for the bus operation, so, and then there are donations from Nottaway County and Amelia County, and
Correct.
fairly small, but they go to those routes that each of them serve.
If you could, Mary, get Alex and y'all work together just to see what we can submit to try to get reimbursed. And also, are we reimbursed for insurance for Bon Secours? For that building?
Yes, we should, I mean, if we're not, we should be, but every year, we'll send them our,
Can we get that figure too, just to, I wanna see what the total impact of the citizens are outside of what we can deduct, is what I'm looking for.
we would certainly be eligible, I assume we're getting reimbursed.
Correct, yeah.
Okay.
What's the Bon Secours building for?
The
town-
medical,
The town owns a building that, we lease to Bon Secours, and they run a family practice center.
and they're supposed to pay for all expenses,
They
lawn
do
care,
electricity.
any maintenance, anything, so.
They pay us a very nominal lease payment, and they have opportunity to extend for 5 more years, starting in May. They've indicated they'd like to extend it, but they really pay all the costs. If we go down there and have to fix the air conditioner, we'll get it fixed and then we'll bill them. We bill once a year, like in May, if I'm not mistaken. We send the bill out.
So that would probably be another
Cutting
one to
grass.
separate out.
That's pretty easy to do. So we actually, when we do our billings you actually get a schedule of the billings, and then you get the premium allocation for every item that's on that. So that would be a standard part. I think we actually let members access that on their web portal too, where they can actually see what those individual item costs are. So the only area that would fall outside of that would be if you asked us to allocate the garage liability to the bus shop. That would actually require us to do a breakdown of it, but everything else you would get schedules of with the individual item breakdowns.
I think that covers it pretty good. Any questions, Ms. Wynn?
No, sir. Chairman, you hit most of my nails on the head.
Philip, y'all got anything?
We've had this presentation one time previous, so I don't have any additional questions. Obviously, there's a lower premium here. I will tell you, I know Stephanie and I know Chris from years ago, and we never had any trouble with this insurance when we were in there.
And I don't think this is different than us receiving health insurance premiums from
It's not as much.
local entities versus.
It's not as sexy and emotional.
Yeah.
Yeah. So I will tell you, we did have a health insurance plan years and years and years ago, and we don't have a health insurance plan right now because of that particular item that you just said. So we don't dip our toes in that anymore. Too personal. It's too personal. It's too part. We like it when the employees aren't yelling at us. That's kind of where we want to live.
Good deal. All right.
Well, thank you. We appreciate your time.
Absolutely.
Thanks for having us.
Nice to meet y'all.
Like I said, we really look forward to the opportunity and hope we get an opportunity to work with you. So thank you so much.
Yes, sir.
You'll be given every consideration, I assure you.
Thank you.
We missed you last time, Mary.
I know. Bye-bye.
I'm Chris, by the way.
Hi, Mary.
Nice to meet you.
Nice to meet you.
All right, thanks.
Thank you.
Agree this
Thank
way?
y'all.
Okay. All right, thank you so much.
Good, get to the
Safe travels.
Thanks.
Appreciate it.
seizure.
Thank you.
Appreciate the time.
Good seeing you. Yeah, good, good. Well, I didn't. I'll talk. Easier to keep straight. Yeah.
Thank you. Fix the what we currently pay. Well, yeah,
Yeah.
what we currently pay this year for insurance, what is that figure?
I think you hit on my,
$60,475 a quarter.
how much?
$60,475 a quarter.
I think that's on my cash sheet.
No,
241,
242.
$60,475 a quarter.
242.
242.
He said it was $47,000 difference, but
It's, I don't
Do you want me to get the
it's,
next one?
it's over 240. Should be about 240.
Yeah, 240 per year, and they're,
Offering equal
It's the
coverage for
same- That's the
185.
same as the option one
That's option one.
185.
at
And then
185.
the enhanced coverage is like bridge coverage is
That
201.
enhanced coverage.
If we
Doesn't
deal with option one,
hit my
the bridge
fancy.
won't be covered either. That we own. According to option one, the bridge will not be covered.
Will not
If
be
we do
covered.
option two, the bridge will be covered.
This is a brand new bridge. I'm sorry, you know it. I mean,
You ready for the other group?
Okay.
Maybe their price comes down too.
Hmm?
Maybe their price comes down too. Have they given us anything?
If they have, I haven't seen it.
Yeah.
is this the people we're with now?
With currently. This is Versa, right?
Yeah, probably North here, but I don't know who's there.
Is that affiliated with VML?
Yes.
Okay, cause you and I say VML, and that's really Versa, okay.
Vaco, these folks are affiliated
I
with
can
Vaco.
tell you, you can save 60,000 miles a year. Okay. And get the same stuff,
Or more.
Or more, yeah.
or more.
And
Yeah,
still
we-
saves with the more.
Mm-hmm.
Let's see
They're
what
coming
they,
in this way. It's easier for them to get in that way.
Yep, that's no way.
No,
They went all the way.
they're coming. It's coming. Yeah, don't touch it.
good afternoon. Thank you, Phil.
Good to see you, Marcus Sensel.
Hey, Mark.
Hey, Phil.
Hey,
How are you? Good.
Good, good.
Hi. How's everybody?
Yes, sir.
Here.
Open.
Sorry.
Good afternoon. Councilwoman Loyette.
Nice to meet you, Nora PDF. This is Marcus Hensel
Pleasure to meet you.
and Thomas
Well, I
Little.
mean, it is what it is, isn't it?
This is Ben Green, our mayor.
Nice to meet you, Tom.
Yes, sir.
Marcus Sensel.
Hi, Nora Pierre. nice to meet you.
I'm a ex officio member, generally very quiet, but I might ask a dumb
He's a
question.
supervisor.
I might ask
You
a
know
dumb
Eric.
question.
I know
now.
Eric,
So-
yeah, Eric, you met Marcus and
Nora
Thomas?
does. I don't think
Okay,
so.
Marcus Hensel and Thomas Bullock.
How are you?
Eric Nash.
How you doing, good sir?
Alright. You're in your spot.
And in the corner.
Hiding in the
You
corner?
notice the camera can't see him much right there.
West Gorman can't reach me back there. I can keep an eye on him.
Alright,
I was gonna say, is that the principal's seat right there where you gotta stay?
That's
Nah,
ISS.
Nah, yeah, that's what that is. It needs to be OSS.
All right,
Alright, well,
we'll turn it over to you to present what you have.
alright, good deal.
Let me get my folder out here. Oh, you got it? Let's see. One, four. That should do that for that. We don't have anybody extra.
I'm gonna give mine to Gormus, both packages to Gormus.
I gave him one.
Oh, you did?
The,
Okay,
the big one.
okay.
Alright. Everybody got one?
You got that?
You got one?
Something like that? Okay.
There you go. Alright, y'all covered?
Okay. Yes, ma'am. I sure do. I've got a black. You want this one? Yeah. It's okay.
There you go. You're welcome.
All right. I'm gonna have to get my glasses.
Well, might as well.
No, not anymore. I thought I could, but I couldn't.
You know,
Not even gonna try.
Don't feel bad.
See ya.
Oh, I'm not. Look, Philip's got his out too. The glasses.
Don't have these then, and I will go home.
All right. Let me get some of these extra copies out of the way. Wasn't sure if we'd have any citizens that would join us for the presentation since it was open.
Well, before we
Meeting.
get started, she handles that, I just wanna make sure, we always like to start the meeting off. How would you all like this to be presented? We can go page by page, we
Exactly.
can go off their hot
Hit
topics.
the highlights.
Highlights,
Highlights.
perfect.
Yeah, you got it. That's what we like to do too. Okay, all the extras are out.
Obviously, you've been with us for a while, so you know what we use, what we don't use, so those topics are the things that obviously we should hit on.
Yes, yes. 23 years to be exact. And 8 of my years at Versa. We've been working with you guys for a while now, of course. So, to hit the highlights, we first want to start off, you guys, appreciate your time today, and it's been a really great relationship, I think, that we've had over the years. It's been 23 years. My last time of standing at this podium, we were talking about the Armory and working through that process, and we talked about what was included in coverage and excluded in coverage so that council at that point could make a really informed decision about how to proceed on things. And now here you are with grant funding and things are all proceeding and going well. So all good stuff that you've got happening here in town. But you know, Versa, as you know, we've been around for 40 plus years, so this whole method of pooling and working with our members is nothing new. I know recently Thomas sent over some training. I think that most everyone at this point has completed as part of your new policy for staff, and think that went over very well and well received. So it's just one of the many ways that we are able to help assist you and all of our members when something comes up with the training needs, whether it's from our safety grant that you all take advantage of, or whether it's training that you attend in person or that we send to help with. So with that being said, just want to touch base with a couple of things about Versa. You know, our financial strength over the years has set us apart in that, you know, if you look at your premiums year over year, you can see that you haven't had this big roller coaster that you would have with other carriers and things. And that's what we work for with our members. We try to keep our our reserves in place so that we can pay your claims without any trouble and so that we can keep your premiums somewhat level and flat. So we have provided to you in the front cover there some coverage options this year along with your contribution summary. And we just want to have those conversations with you because that's what we're here to do, and that's what we want to do with all of our members. You know, if something's giving you a little bit of heartburn and you think, you know, I need to cut some premium, well, then we can definitely talk about that. If something's not at a limit where you think that it should be or you want it to be changed, then we want to talk about that. But where you are with your coverages currently and with your limits, for example, having a deductible of $500, for example, on the property, that's just where it has always been at the comfort level in the past when we've had the conversations about renewal and where we've been. So again, it's fluid. It's open for discussion, and if you want to have premium savings, then we can look at potentially, you know, raising that property deductible from $500 to $1,000 and giving you a premium savings of $1,775. So again, this proposal is fluid, and why we like to have those conversations each year about the renewal and where we are and what's being provided. So from a coverage standpoint, we do want to talk about some things because coverages are being utilized. For example, there were 3 boiler and machinery claims in the last 3 years where we have come in and investigated your claims and we've paid them out for you. So coverages are definitely being used. Another area of where coverages are being used is within the, let's say, the no-fault property damage coverage. That is by far not a standard coverage. If you go to Travelers Insurance, for example, and you tell them you want no-fault property, they're going to look at you and say, you want what? That is something that we developed years ago in conjunction of working with members so that we could help meet their needs. I call it the keeper of the peace coverage, for example. You don't want Channel 12 showing up here when you've got a sewer backup claim and a homeowner is disgruntled and they're demanding that you pay for their damage, but yet you don't have any liability in there. So our stance would be to deny that claim. But we don't do that when you've got the no-fault property, which is what you do have. And so that's when we pick up the piece for you and say, okay, on behalf of the town, your claim's denied, but the town has this special caveat here, and we can pay up to $10,000 for your damage to make you whole. And if you all as the town agree and tell us to pay that claim, then we will under the no-fault. But we don't automatically pay it without permission. But that is an area where you've done that. And this year, we are offering to you a increase from a $10,000 limit to a $25,000 limit for an additional premium of $1,600. But again, that's a special carved out policy coverage that we've given as an option to the town years ago when it was created. But again, it's an option. It's not something that all of our members have. It's just out there and available to you, and it is something you've used. But again, if you're looking at dollars and cents and you want to start tweaking things and making a deductible here different or not having that coverage, that again is an optional coverage that not every locality has in the state. So with that being said, do you have any questions for us specifically on coverages? Do you have anything that you want to talk about or see? And in looking at this coverage option page, does any of that bring up any questions? Or any other options you might want to see. And if you don't see it today, it's fine. Please just reach out to us later and we can certainly update this and provide it to you. But again, what you're seeing here as far as coverage limits and everything is based upon what you've provided to us. So one thing to note this year is that in our policy, when you start talking about coverages, we have not added in any exclusions, changed any limits or deductibles outside of what we consider to be your exposures. So your exposures are things like your auto schedule, your property schedule, your vehicles, your employees. We get every year an update, Carol's provided it this year, of what we call your LOTA schedule. And that shows us who are your staff, who is considered a paid employee, who's a volunteer, those types of things. So one thing I really want to notate about this to you in this proposal, that I think the proposal you received prior to us coming in, it's my understanding that the proposal you have before ours does not include FY25 information. What you received, is my understanding, is an FY24 proposal information, because that's what they requested. So because they didn't request current information, what you see as far as trying, excuse me, what you see as far as trying to like lay these out side by side and look at them and look at bottom dollar numbers, you can't do that because the exposures are not the same. The property values, we increased those. You added this year 13 vehicles, one of which, are you ready? One of which is a fire truck.
Well, I was getting ready to ask that.
And let's talk about that value, because that value of that fire truck is $1,766,000 in value.
And on your liability, or on here, it shows automobile is 1 million.
Okay, so that's where, let's talk about that, and that's a great question. So you have two pieces in the auto policy. You have the liability piece, which is 1 million. Then you have the physical damage piece, which is where I'm covering your auto schedule. So your auto schedule is updated and showing those new 13 vehicles that are not a part of the quote you have there. So when you look at that auto premium number, you can't lay it down and compare it apples to apples, because it's not. So that's really one big piece I want to make sure that when you're looking and comparing our quote to the one you've already received, you have to really make sure that you understand that payrolls don't match. They didn't ask you for updated payrolls. Do you know that your payrolls are up 30%? Is what your budgeted payrolls is if it passes. And we'll update that.
We added the positions in the PD.
Yeah, and we'll update that. So, I mean, if your budget doesn't pass, we can update those because things are fluid. Yeah, things are fluid with that. But what I do want to make sure is that you're fully understanding that, again, these are not apples to apples because they did not ask for updated information
So if
in
the
providing
fire
it.
truck gets struck by lightning, and
Yeah.
makes it a completely useless vehicle,
Mm-hmm.
it will be paid for, even though auto liability is $1 million, but the automobile physical damage, we would actually schedule that one out.
You were correct. However, here's a difference in our coverage versus the quote that you received. For the first 5 years of the life of that vehicle, we're going to give you replacement cost of that vehicle. New replacement cost, right. So $1,766,000 is what you're going to get. If you look at the coverage on your other proposal, you're going to get actual cash value. So when you drive that vehicle off the lot, I'm assuming a fire truck is just like a lot of other vehicles. It potentially could depreciate immediately. You also get wear and tear on it. So if that vehicle after 3 years has some wear and tear, but it's completely destroyed sitting on the interstate and somebody, damages it and it's totaled, you're still gonna get that full replacement cost under our policy, not actual cash value. Yes, and so that is a significant difference in that. We also have another 22 fire apparatus that we added on for $720,000 as part of the updates to your auto schedule.
And then,
22.
I'm sorry, a 22 at $720,000. Yeah, that was a.
covers all vehicles that are above $100,000 in value. So it's really meant to protect your refuse trucks, your high-value utility trucks,
Yeah.
your fire trucks.
Bucket trucks, whatever.
Exactly. Mm-hmm.
Because those are the types of claims that would have a budget impact.
Yeah.
If
It
they're,
is.
and unfortunately, in what we see with as many municipalities as we cover, certainly we do not want to see a fire truck
Right.
get wrecked or ruined,
Yeah.
maybe every 10 years.
Mm-hmm.
But it does happen, and when you're talking about the cost of the fire trucks, you guys are not alone in the fact that you're starting to have fire trucks pushing $2 million.
I mean, I remember getting one year 14 years ago, and we buy a fire truck for $500,000.
Yeah.
Man,
Exactly.
We bought a tanker in Amelia years ago. It was like $175,000.
Mm-hmm.
Nothing.
Yeah.
Probably about $500,000 now.
Yeah.
it's still a lot of money, but.
That's right. So we just want to make sure that you understand that the coverages that we have implemented all these years, because initially, you know, at Versa we started off only writing workers' compensation. Through the years we've added them. And we've added them all within the mindset of how do we do this and look out for the members as a whole, because pooling is different. You know, with your boiler machinery claims that you had, honestly, if you were with Travelers Insurance Company, they would be sending you a cancellation notice. That's what they would be giving you. But pooling, thankfully, doesn't work like that. So pooling helps secure you because it's pooling as a collective with all 480 members that we have. That's right. That's right. So, I mean, you know, that again is the collective sharing in that respect of, you know, all the claims and why it is where it is. So that's what we look at. Each and every member is underwritten. We look at you all as an individual. You're not rated, you know, like, oh, here's another town, they're just gonna get these same rates. It doesn't work like that. Every claim that you all have had, we look at. We see if there's any subrogation potential, meaning can we recover money from somewhere else so we can take those out of your loss ratios. Again, we're always constantly looking and having the discussions internally, talking with you all again when we see something that might be, you know, advantageous for you all to take advantage of. You have, I think, over the years taken advantage of our safety grant, because part of pooling and part of being a pool in the state of Virginia, the state corporation says we have to offer risk management services. And at Versa, I mean, we take that to heart. We inundate you all with emails about training, about our safety grant that we offer, about online training, in-person training, OSHA. We come out here and help you all do inspections of all your facilities. And we're looking at them through a different lens to help you in that now that OSHA can come out here and give you a monetary penalty for a violation, we're doing everything we can to help you not do that. And we're trying to help make sure that your employees, like everyone else, goes home to their families every night and that they're safe. And that's our goal at the end of the day. And so we push that a lot. We offer that out there. It's not a requirement by any means, but it's definitely a very big value added service that we really take seriously and that we want all members to utilize, whether it's online, in person. The safety grant, year over year, you guys have definitely been utilizing that. And that's not pennies anymore. It used to be, yeah, it's 4,000. I mean, it used to be a lot smaller allocation, but you know, as we've grown and our board really thinks that this is important, so we have allocated $400,000 that members can take advantage of.
Our board allocates.
Yeah, our board allocates
and
that.
I do want to make that point
Yeah.
to you all. It's just, we are truly member owned and governed. So there's no pastors, there's no side corporations set up. We are all employees of Versa. And we all, I mean, you can see our board laying right in front of you. There's all CAOs like Philip over here that are on our board that represent our membership. And we are purposeful in striving to have a board that represents our membership. So you see cities, counties, towns, and authorities on our board. And that money that Nora's talking about, that 400,000, yes, it ebbs and flows, but that money is money that our board directly allocates for investment back into our member communities to hopefully prevent and reduce losses.
Yeah.
To give you an example,
What is the $20,452 scheduled credit? Is that what this is referring to? Anything that I see that you have on the contribution summary?
Down at the bottom, the schedule credit, that's where we, Versa is very open and very transparent about all that we do for our members. And so we have applied for you all, yes, a $20,000 credit that is not shown within that annual contribution for items such as, you know, utilizing risk management services and what does all that look like. So yes, underwriting has the ability to do that, and so they have applied that much credit.
and that credit is already reflected in the.
That is, yes. But if you can go back and look at our past proposals, you'll see every year that we allocate and put that out there with it.
But of course, the coverage options are not. So if
Correct. So we would have to,
if you decrease or add coverage, you see the savings or increase
Yeah.
there as well as far as the money.
And so I can update this contribution summary. Like if you came back to me and said, we want to take XYZ options, then I can definitely reallocate this and show it to you, that. But again, I didn't want to go and start finagling with all of that until you had a chance to look at options and talk about what you might want to see.
Looking at cyber liability, do you see that being a huge, I mean, obviously we're included $1 million. I'm curious as to what really is cyber.
Well, let me tell you about cyber. Sky's not falling about cyber, I promise you, okay? We've been writing cyber coverages for our members since 2012. We've had about 90 claims within the pool that whole time. We haven't even come close to these limit options that were there. So let's
So
look
you're
at the.
not recommending, well,
So let's, hang on a second, let's look at the cyber page real quick. So if you'll flip through a couple pages, you'll come to the cyber page. So I like to explain the cyber coverage a little bit in that cyber is set up with what you would consider to be like buckets, if you will. So in the first bucket, you have the cyber liability limit of $1 million. Any more than $1 million, you're just putting money in padding someone else's pocket. Because here's what's happening. There are no claims that Versa has ever paid out of that first bucket of cyber liability.
Or denied. We haven't had the opportunity.
There's never been one claim submitted to us in that bucket limit, okay? So the reason for that is that people just haven't come on yet. I'm not saying we're not gonna see that, but since 2012, there have been no claims here. And I don't know of any cyber company that does cyber insurance out there in the world that has had it either. So here's what happens. Cyber, you get a cyber claim, and it's gonna potentially be a couple of things. You're gonna get like a spoofing email. You're gonna get a data breach where someone sends out all your data and they've breached your system, and so then you have to send out credit monitoring. Or you're gonna get the ransomware. Those are like your top cyber claims, right? So those are the bucket limits that you wanna look at and think, do we have enough money there? Do we need to increase this limit? Do our policies and procedures cover us in the fact that we wanna prevent them, right? So it's not that I wanna buy $5 million of coverage. I really wanna be smart on the front end and have my procedures in place. So at the end of the day, Carol's gonna know on a Friday afternoon, Philip's on vacation, and she's gonna get this email that says, hey, you need to transfer these funds to XYZ bank account, and it's urgent, it's this, it's that. Carol's gonna do two things. She's either gonna call Philip and get him on the phone and hear his voice and say, did you send me this email? Do I really need to do this? Or she's gonna wait until Monday, till he gets back to the office and be like, Philip, did you send me this? And he's probably gonna be like, no, I didn't. And then she's gonna be like, whoo, I'm glad I didn't send that email, you know, to authorize those funds. So again, it's talking with your staff, developing your policies and procedures, but then also looking at the different bucket limits, if you will. So when we look at our cyber here of what we offer to you, as well as all of our members, we're looking at our membership as a whole and as a collective. We're also looking at past claims, and we're looking at claims that are happening out there in the real world, okay? So that's where these limits come into play. So when you see that we have a $16 million aggregate limit for all members combined, that's not anywhere, again, to be a concern. We're just trying to be open and transparent with you on this, where we are with our reinsurance and how much capacity we have. But since 2012, we haven't even come close to even approaching the $1 million limit, let alone a $16 million limit for members as a whole.
So in 12 years, do you think you've even reached the 16 million in 12 years?
The last 3 years, we haven't even hit $1 million in each year.
Yeah, she was just saying.
Yeah.
It's
So, I mean,
And going back to the claims
Yeah.
themselves,
Mhm.
which is different than most, because we actually provide the coverage, we don't strip it out, which is very easy to do in insurance, like you all know.
Yeah.
That you can say that you have coverage, and then, you know, claim comes, you don't have coverage.
Correct.
All it takes is a couple words here and there. But one of the things that we do pride ourselves on, and one of the things that we do cover and makes our loss experience very different, is, as silly as it sounds, 45% of our losses are related to fraudulent instruction.
Mhm.
And that is not the same with most. So when we meet with CISA and we meet with all the different people, they're like, you guys are covering these claims? It's like, absolutely. Because Because when that email comes in, and we know the dominoes are stacked already against you with FOIA and the Virginia Public Procurement Act, and people know all that information, and they're able to prey on that, and use endearment and use of authority and eagerness to please, and all of a sudden that Friday afternoon email comes in, and someone wires one of your town employees' payroll, because they said, hey, I changed my bank account from Bank of